Aloha and welcome to Java. Thank you all kindly for joining me. This is for Tuesday, May 7th, 2024. Let's go right into the markets as always. So we are looking at our MMRI as our main risk indicator. Stable. Yesterday to today actually stayed stable. So we saw lots of green in markets yesterday as the dollar and the 10-year yield basically held steady. So as we were expecting, not a lot of news coming out, not a lot, just basically earnings. No reports came out. Fear greed index still slightly inching back towards greed, went up 1 point. So that's gaining a slight bit of ground, if you will. So looking at the stocks and the futures, now this looks a little bit more normalized than yesterday, where it was basically offsides by being green across the board. So still green this morning, and futures still showing a good chance probability of continuation. So none of this is a guarantee. We deal only in probabilities, but it looks more likely that as far as the opening, this is going to continue in a bit of a rally mode. So it will be moderated, not as it was yesterday. So basically, they're back on the rate cut hopes. So a little bit more chop, and towards the end of the day in particular, I expect they will be looking more towards Wednesday. So right now, the largest risk really is on the global unrest going on. We'll touch on that a little bit, but really headline driven. And what are we really watching right now? It's the bond market. There's a lot of movement on that. It's relatively quiet in the mainstream media. And we're going to look at that a little bit more because the debt market, as most of you know, is much larger than the stock market. So, what we're seeing with this, even through all of this manipulation, the global bond market rally is facing a supply test as the US refunding is kicking back off. So, again, Powell's less hawkish remarks, that's another way to say that he's easing up, and weak jobs numbers fuel these gains that we saw yesterday and very likely continuing to today because market expecting more rate cuts again, or at least sooner. So going into our calendar and earnings today, we're going to be hearing from Fed President Kashkari, the guy with the crazy eyes. He speaks at 11:30 a.m. and we've got 3 o'clock in the afternoon expecting consumer credit. So really not too much depending on whether he says anything significant could move markets. But tomorrow's Wednesday, we've got wholesale inventories, a couple of Fed presidents speaking again, but really not a lot. So looking at our earnings calendar, again, we've got Walt Disney that did very well. We've got a few other larger companies here in case you're watching for those. So moving into basically companies, the banks behind them, starting with the United States government. Now the debt is so incredibly, it's just immense that now they're paying $2 million in interest per minute. So United States taxpayers, $2 million per minute. So this is just how insane this debt has gone. So a lot of people now beginning to realize that the impact of this, and they're talking about the higher interest rates, the economy, it's basically got nowhere to go. It is cornered. So with this, they're also looking at some of the other programs with the government funding. Now, Social Security, and there's a lot of backlash about this because everyone that works in the United States is required to pay into Social Security with basically the promise that it will be available later. It's mandated type of retirement plan. And they're saying it's going to be exhausted by the year 2035. And then Medicare, which is medical system, by 2036 is the projections. So that's in quite a bit of trouble. Moving over to other central banks, we're watching Bank of Japan still. So they're saying they're going to closely monitor the yen's impact on prices. So yen dropped in relative strength again. So basically, they're looking at inflation to come roaring back. They intervened into this, and still that currency losing money much more rapidly than the others. So they're kind of trying to keep these in balance. So if any one of them goes out too rapidly, right now we're watching the yen, this leads to basic total currency devaluation and then hyperinflation as far as pricing. So we're looking at Bank of England postponing their long-term repo operation due to tech issues, quote unquote tech issues. So very odd that they have tech issues only when it's in their best interest to put these long-term repo issues, or however they need to manipulate the market. So with that, we get a couple of reports coming out of the Eurozone, mainly some very interesting ones. The Eurozone retail sales rose the most in 18 months. So they are talking about this as a great recovery for the spending, and that uh, their economy is recovering just fine. They may not need to cut rates either. And then we've got Germany, who is, of course, the powerhouse of the Eurozone. Their exports rose more than estimated. So, again, pointing basically to basic recovery in their economy in the Eurozone. It's also fake numbers. They deal in fake numbers they learn from the United States. So, going into US companies, got a couple of key things. The first is that the SEC, Securities Exchange Commission, in the United States warned Robinhood that basically their cryptocurrency side is again under lawsuit and more scrutiny. They got basically Wells notice. So expecting Robinhood to have issues, but basically this is an attack on the space in general. So, moving over to a couple of other things and why I'm bringing these out in particular. Moving to Amazon, they're investing $9 billion in Singapore to expand their cloud services. So, this announcement coming after Microsoft unveiling major investments in Malaysia, Thailand, and Indonesia. Why is this huge? Couple of reasons. First thing is these are the tech industry that built all of the booming success in the United States for this quote unquote Mag 7 that had huge gains. They're moving offshore. First, moving into Singapore, Malaysia, Thailand, Indonesia, because less expensive labor. So, the second part of this I want to bring out is the expanding section in there, as I've been speaking about, is for them AWS, Amazon Web Services, cloud services. So, I expect this basically business, this segment is going to continue to grow. Regardless of how the economy does, they will still need growing space between services for businesses. Also, moving to CBDCs, I think they will need that space there as well, because the government does not have the infrastructure in the manner that they want. They're going to be basically making it redundant, and I think they'll be using this space. So, third story and bring out Boeing Starliner capsule first crew test flight postponed because there was Atlas rocket glitch last minute, of course. So, this made the stock plummet. And part of the reason I'm bringing this up is number one, government moving back into the space sector through Boeing. They have huge government contracts. And number two, because I think that companies such as this, I could be wrong, simply my take on this, that they're going to be subsidized. So I think Boeing going down too far, they are a duopoly. There's not too many choices outside of them, and they're huge in the military industrial complex. So they turned down basically subsidies the last downturn. I think they're being cornered, and they will be forced to take the subsidies this time along with the strings that are attached. So, moving into the wars and the trade, basically, I'm sure you've heard about this because we're getting hammered in the news. Israel sending troops into Rafah. They sent a ground force. And they're talking about this great ceasefire. Well, Hamas apparently accepted a ceasefire deal that was crafted between the couple of other governments, including Qatar. So this was not something directly done. Hamas accepted it, and then Israel basically is running over it anyway, saying that the ceasefire plan backs, uh, that it falls short. So we'll be watching that because Qatar and Egypt crafted this. So kind of should have been in. But regardless of that, and regardless of the point from standing on either side, what we're looking at is watching these headlines. Because if it comes out one side or another, brings out this war, it's going to be major headwinds for the market. So we've also got Russia issued military ultimatum to the United Kingdom. So these are all the stories that they're putting around. But basically, the UK said that they armed UK with Ukraine. They armed them with long-range missiles and said that they could use them however they like, basically for Russian targets. So Russia said that any UK missile basically used in attacking Russian targets, they would retaliate. So not very good news on that side. However, let's move forward. In all of this, you need a little calming. Got the perfect one for you today is lavender. We've got all of the benefits with this, also with basically anti-stress relief and just a nice smell. I like it and very calming. Goes well with chamomile in your tea. So with this, like to bring forward Wall Street now turning water into wealth. They are trading this on the market. So it's one more reason to grow this at home because farmers are going to be pressured in the future. So start growing your own garden, your own medicinal cabinet, if you would. It's all natural and you know what's been sprayed on it, where it's been based. So many benefits. It's also, as I say, beautiful potted plant. All of these so far can be grown indoors or if you have small spaces. So I hope you like this sector. I've been getting some decent feedback on this. And with this, I wish you all a wonderful day. I'm going to try to make it to a Discord tomorrow. I don't think I will be able to. I will be traveling again. So until I see you again, my friends, stay free.